This is the daily market analysis for tomorrow, October 25th, 2024, Friday. Let's get the charts. This is the Nifty 50, and you can clearly see the Bollinger Bands is expanding on the downside, indicating further downfall. Then you also see the candlestick, which looks almost like a doji, which is nothing but indecisiveness. The market is indecisive as to go down or try to move up. And it is bearish bias also because of the fact that it's below the 20, 50 and 100 exponential moving averages, and the next major moving average support is far away at 200 exponential moving average near the 23,340 levels. So market closed flattish today, small body flattish close after yesterday's attempt to move up. Today it didn't even attempt to. Yes, Nifty. Banknifty is quite contrary to what Nifty is behaving. Bollinger Bands clearly shows no expansion, instead it's showing contraction, which indicates sideways. Market wants to move sideways, but the bias is still bearish because it's below the 20 moving average. Now you can see that today's move candlestick, it's green bullish candle, but it met with the resistance of the 50 and the 100 exponential moving averages, and then gave up some of the gains that it made. Now intraday price action, if you see, this is exactly what happened. Market was range bound in a very narrow range. Bank Nifty also, you can see that it attempted to move up, but could not further go up and ended up flattish. But Bank Nifty gained more than 0.5%, so it's a 300 point up in the Bank Nifty. So that's contradiction or a divergence between how Nifty and the Bank Nifty is performing. So one is trying to remain the sideways with momentum trend and price action, while the other is bearish in nature without all of that. And let's try to look at the resistance support levels first. So the first hurdle would be to take out that 24,940, which is moving average, 20 exponential moving average. It's very close to the 24,950, which is the 50 exponential moving average. Then you have a medium at 25,993. So basically it's 24,900 to 25,000, more or less, as it was yesterday. That's the main hurdle to be taken out. Then 25,434. That's the resistance, and then you have 25,850, which has got the next gap resistance upside. Downside, which is what we are more interested. The first major support will be the Fibonacci 50, as well as the previous swing lows that comes in at 23,900 nearby. So 24,000 is very close by the surrounding number. So 24,000 nearby would be the major resistance, and 25,000 nearby would, other way, 24,000 nearby would be the major support, and 25,000 would be the major resistance to the upside. So market is hovering to that, but the bias is even more bearish because of the fact that expansion is downside and the price is away below all the 20, 50, 100 and all that exponential moving averages, right? So downside after the 24,000, it can go as far as 23,340. That's with the 200 exponential moving average, as well as a 60 Fibonacci retracement and all that comes in. So as of now, the correction is probably 7%. Let me just quickly check that. So the correction is 7 point something. That's all, 7.5%. Well, Bank Nifty also, the maximum correction that has happened is only 8.5%, and it has not retested that. Instead it's trying to move up. So if you look at the resistance, major hurdle would be to take out again that confluence of the 20, 50 exponential moving averages that comes in at 51,766 and 51 51,700. So 51,700 is the zone where that moving average resistance is. I think would be the first hurdle. After it is climbed above the 20 exponential moving averages, the next hurdle would come in at the 52,800, but there is a gap, and after that you have 53,000 and then 53,340. That's a neckline of the rounding pattern. So Those are the hurdles. As of now, it's sideways, and a close is expected above the 20 expression moving average, which is above the 51,800 nearby. So that's what's looked out. Downside, the first support would come in at the 51,720. That's where the 100 expression moving average is there. After that, the Fibonacci 50 previous string lows comes in at 50,200, and 50,000 rounding number is there. That's a good question. And if that is breached, it goes to the 49,400, which is 200 expression moving average, as well as Fibonacci 61 retracement levels. Those are support resistance levels. So let's try to understand what the momentum is saying. Momentum has dipped in the bear zones and falling down in the case of Nifty, and momentum is climbing up in the sideways in the case of Banknifty. With respect to the trend is bearish on both time frame, or both as per the ADX, but the trend bearishness is reducing in the case of Banknifty and increasing in the case of Nifty. Right, volatility index has cooled off 4.5% and set below 13.97. So volatility is cooling off is a good thing. But remember, it has climbed up from the 12 levels to the 14.5, 60 up to the 15 it climbed recently. So it's just a cool of a 4% after that big major fall down. That's about momentum and trend and volatility. Now, how did the market perform overall? If you see, it was deeper than the HUL following the results. SBI did well. It's a mixed bag. I think it's a Banknifty, it's HDFC Bank that did well. SBI also did well. HDFC Bank didn't do well today. It's only less than 1%. Who did well above 1% is SBI. So public sector banks did well for some reason today. That's why the Banknifty managed to close 0.5% up. But the big sell-off was in the HUL today. That's a highlight. Institutional selling, if you see, it's a 5,000 crore selling today also by the FIs, and that's 18th or 19th consecutive days of selling that the FIs has been doing. It's 90,000 crores have gone off. And he is buying in more than that definitely. Today also 3,600 crores of buying has happened. That's what is the mutual fund money that's holding the market. So FI selling remains to a concern. Heavyweights and all that. Heavyweight stocks, HDFC Bank, Reliance and ICICI Bank managed to close green while others closed red. And deeper cut has come in the ITC, which went along with the sector of FMCG itself. The debt sector is down, so ITC got hit badly. That's probably an opportunity to buy because it's dividend paying multinational conglomerates that you can invest in safely. Yeah, so that is falling down. 2% got badly hit. Others are all. HDFC is doing good. Trying to break out of that persistent zone once again below volume journals, as I said yesterday. It's also attempting to climb up, but it has corrected substantially and is very close to major support zone at 22,600. Another buying opportunity probably. HDFC Bank was flattish in this close. So overall, if you see the HDFC Bank, ICICI Bank, and Infosys, so only three stocks that's maintaining the sideways momentum, and others are all falling to the bear zones. So hence short-term bearish RSI momentum zones, TCS and RSI momentum bearish zones, Bank bearish zones, ITC, of course it's in the bearish zone. So majority of the heavyweight stocks are falling to the bearish zones, which is negative. And if you look at the different sectoral indices, what performed today was only pharma. What got hit was FMCG, deep cut of 3% nearby. Others have closed flat. Only sector that seems managed to close green was the pharma, 0.5% nearly. Mid cap and small cap is also seeing red but flat after the deep fall 2 days back. It's trying to come, but trying to move, but remains in the bearish momentum on the short term. Both of them, short term bearish momentum, 8 to 9% of correction has happened. So it's broader markets that we talk about. So broader markets and heavyweights and sectors have all got badly hit in the short term. Support resistance we already seen. Upper interest is expiring today on the Nifty, so we'll see in Monday onwards. FIS we already seen. US markets are showing some 1% down, correction of 2.5% or something has happened. So, but it's not far away from the all-time highs. Gold is at all-time highs, breaking out like anything. Oil is under control below 70. It's okay. To sum it up, market remains very bearish, but Banknifty is showing some strength, and once it closes with a green candle above moving average, we can hope for Bank Nifty to lift Nifty as well. So the fundamental reasons for the recent correction are listed down here for your reference. There's nothing to do with technical. And the risk-heated valuations, we have always been selling that. The Chinese buying strategy with FI selling. And earnings growth has slowed down. Some ratings have cut down. Goldman Sachs yesterday. IPO money flow is taking away the money that is supposed to get spread into other stocks. So the BFL rules, pledged stocks are getting unwinded by the FIs. US election outcomes are anticipated in another few days. So the reasons for the corrections are the risk and all that we see in the market. So stay safe, stay cautious. Bias is bearish. Let's hope the Bank Nifty does some magic. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.